guys, Brian Stevens here with Mortgage Shots. Today I have Scott Osborn. He's with Formula Mortgage Capital. He's located in Scottsdale. He's in California, Colorado, Arizona, my neck of the woods. And we got a lot to talk about. He's been in the business for over 30 years, about the same age as me, but clearly living a healthier lifestyle. Hey, Scott, how are we doing today?
We're doing great, man. We're doing great.
So one of the things that we spoke about, I asked you what distinguishes you from other brokerages out there. And I caught on to one thing because I think it's a huge, huge issue. You said, I really focus on self-employed people. Now, self-employed people often come in with their own database, not only from their friends in that ecosystem, but also the business that they represent. They're also underrepresented in the mortgage space because a lot of folks don't know how to read taxes. They don't understand some of the products that they're going to use, and they're missing an opportunity. I think the biggest area where loan officers could do better is working with self-employed folks out there in some of our small businesses that we have in our back door. What are some of the things that stand out to you when you approach a self-employed borrower? Or what do you preach to, maybe the wrong word, Grant, take that out. What is the guidance you give to other loan officers who really kind of want to dig into the self-employed market?
Well, I think to start with, it's just really starting to understand tax returns, because that's kind of where everybody's going to start. You're going to start with reviewing tax returns. You're going to start with looking at those and then decide, is a borrower going to qualify using his tax returns? If not, look at the other programs that we have. So I think a lot of loan officers may start with using a bank statement program or something that's more catered to somebody without having to look at tax returns. But I always start with the tax returns first. I look at their business, I look at all that, what's going on, look at the bank statements and get a good picture of what's going on before we even start deciding what kind of program or how we're going to help this borrower. So I think they just need to understand it and not just glaze over the fact that, there's a 3-inch pile of tax returns. I don't know how to deal with those, so I'm just not going to deal with it. And I think it's a learning process, and it's something that isn't taught anymore. It hasn't been taught for a long time, I think.
Do you think, I kind of found this before where I was interpreting tax returns differently than my underwriter. The underwriters of old, and I don't want to go down memory lane here too much, but when we would manually underwrite everything, every loan officer and every underwriter would look at tax returns, and we would start, splitting hairs on unreimbursed expenses and things of that nature. For somebody who knows how to read taxes properly, what is the difference? What's the variance in terms of income that you might be able to pull out versus somebody who's kind of wet behind the ears on this stuff?
It's really experience, and it kind of goes back to what you said. It's about talking about the battles that you've had with underwriters about what income they'll use, what they won't use. So you have to go through some of those battles. There's not an actual course anymore. There used to be, but there isn't anymore a course to actually learn about how to underwrite tax returns. And those courses usually used to be taught by an underwriter. So you got to know what they would look at, what they wouldn't look at. That's gone. So now it's an experience situation, and you need to kind of take what you learn from an underwriter and then apply that to the next set of tax returns that you look at. But I agree with you. There's always I want to use a certain amount of income. The underwriter says, well, I don't think I want to use that income. And then the battle ensues, right? You gotta come up with your points as to why we can use that income and hopefully get the underwriter to see it your way, which does work.
It does work. It's interesting to me. It's I basically vacated the space for the better part of 20 years and re-entered the space. And, the difference with our underwriters today from, 15 years ago, 20 years ago is markedly different because you have a whole generation of underwriters who've never really kind of dealt with manually underwriting a file, and that's basically reading findings.
They almost know less than you might know because they just don't have the experience. They didn't go through that. They were, like you said, they've had a whole generation of just doing either no doc or stated and not really having to deal with tax returns from that standpoint. So it's a learning curve for them too, I think.
I want to get this out to our audience right now because this is hugely important, and I see it all the time, is if you have a client who's going to somebody like Scott, or because we already spoke about this, he teaches classes to his loan officers on reading tax returns and these type of things. He might find 20%, 15% more income than what an underwriter is going to find that meets guidelines. And that's a difference between getting an approval and not getting an approval, especially with prices where they're at right now. So I see an underserved community with self-employed folks. So let me ask you this. Why did you kind of focus on self-employed people? Where did you see the benefit, and how is it rewarding you?
Too many times I've had a self-employed borrower come to me and say, hey, I went to go get a loan, and this loan officer or this bank said, we can do it. Just give me your tax returns, without even having a conversation about the returns and just submitting the returns underwriting. And next thing you know, they're being declined. Or what always happens is if you're a self-employed borrower is told, well, you need to file your tax returns first. And then once you file your tax returns, come to us and we'll talk about a loan. Before a self-employed borrower goes to file his most recent returns, you want to take a look at what has he filed before? What does his income look like previous to this? And does that income continue? And if it does it work for qualifying whatever he's qualifying for? You'll have most accountants they're gauged on how much of a return and credit or a refund they can get from the IRS to the borrower, when they're not thinking about, well, maybe this borrower is going to apply for a home loan. And if I go ahead and write off everything, including the $852,000 worth of meals that this borrower may have eaten, he doesn't qualify now.
You got to think of the bar bill.
So you gotta take a look at everything, and then I generally have a phone call with the accountant, and we'll talk about what's going on with the borrower's income, make sure that he's prepared to actually qualify for a loan, and then before we go any further, right? So I think that's missed. I think it's just a point, oh, give me your tax returns and we'll submit it to underwriting and see what underwriting says and whether or not you get qualified. So I had too many times where a self-employed borrower is coming to me because now he's been referred to somebody saying, hey, this guy knows how to do it. Maybe go to him, have him take a look at everything, right? So from that standpoint, I've tried to go out and at least get ahead of the game, right? Get ahead of the ball and either talk with accountants or let accountants know, hey, there's ways to take a look at a borrower's income and make sure that that borrower can still qualify for a home loan.
And that's on the front end is like, it's hugely important that you understand that. But then the second part is you might run into a wall to where somebody's got too many write-offs and, we're not going to be able to do this thing full doc and it's not going to be, an agency type of loan. And then we have to get off the grid and start looking at other alternatives that would help people out. So what are some of the products that you're using when we don't follow our Fannie, Freddie, Jenny stuff and we have to get off the grid and go non-QM?
Well, you have bank statement programs, obviously the 12 and 24 months of doing business bank statements or personal bank statements, whichever one works better for the borrower, and P&L programs, right, that we have now. Those are definitely great options for a self-employed borrower that maybe don't qualify on a regular, full doc Fannie Freddie type of or conventional type of loan. So there's plenty of options now that we can utilize for that borrower that makes your life a little bit easier as well.
The one that really kind of got me was the 1099s. You can take somebody.
Yeah, that's a good one too.
How many gig workers do we have right now? People are, the thing is, which I love about the fact that you said you're working with self-employed folks, is gone are the days of, going and working for Chrysler for 30 years, getting a watch and retiring type of thing. We have so many young people who are basically hired, assassins who go in and work and they might code over here and code over there. They don't have the traditional W-2 stuff and it's underserved. The other point is that I don't know if most people know this, but self-employed people on average make nearly double what your average W-2 employee makes. And what that means is with higher prices, you're going to be working with a group of folks who become much more qualifiable. So this is all huge. What are the benefits that you're finding from working with self-employed people? So you clearly have a number of what distinguishes the self-employed person that makes that very desirable for you professionally?
Well, I think it goes down to the fact that you can get a lot of referrals from that self-employed borrower. They have employees, not all of them, but you do have that ability to have the employees. Also, I like to make some type of a relationship with the accountant if I'm dealing with the accountant, because that's another reason why I like to look at the tax returns, because now we have an accountant's name and phone number. Well, that accountant is now a possible referral source for me, because I'm going to call the accountant. I'm going to talk to the accountant about
that's good.
Mutual client. I'm looking at doing qualifying for loan, and whether the tax returns work or not is irrelevant. All I'm doing is I'm going to ask the accountant a couple of questions about the returns. Hey, what about this? Hey, what about that? Hey, thanks so much for helping me. Thanks for answering the questions. Oh, by the way, if you have anybody that's looking to get a home loan, I do loans for self-employed borrowers all the time, and I'm here for just to answer any questions you might have. But those tax returns give me that ability to create another referral source. So between the borrower themselves, of a self-employed borrower, possible business owner that maybe have employees, there's another referral source. The accountant's a referral source, and then beyond that, usually self-employed borrowers have a whole network of people that they work with, depending on the type of business, but they're usually in line with other maybe self-employed business folks who maybe need help with something. So I think it's a great referral source, and there's different avenues you can take with it. So it actually works out pretty well.
I'm going to steal that, Scott. I can't believe I haven't seen that one. It was right in front of my face and I didn't see it. I always believe in kicking the can down the road as far as you can and looking at all the opportunities that your current situation presents to you. I swear to God, it's never dawned on me. If you have somebody who's self-employed, you absolutely have to make a call to that account in some capacity. I mean, everybody knows that. And
you might need a letter, you might need whatever. Right.
Okay, so let's talk a little bit about your company. This is where I want to get a little personal, and it's nothing deep. Formula Mortgage. Now, my 17-year-old daughter, inexplicably, outside of myself or anybody I know, for some reason decided about 9 months ago that she was going to become a Formula One fan. And so, by extension, I have to become a Formula One fan. So, and I've seen all the races this year, and I saw Formula there. What's behind the name Formula Mortgage?
I don't know that there's anything behind the name. They just kind of came to me one day, and I'm like, all right, well, we'll run with it, right? There's nothing specific about it other than there was initially there was a conversation about when it was trying to qualify a borrower and coming up with a formula to do it towards debt to income ratio work. Then we're like, oh yeah, that's a good formula. And then it just kind of evolved from there.
But it is a great name because I was thinking about this. I'm like, well, it could be formulas. And that's kind of what we deal with in this business is we're trying to untie knots.
Sure.
And as long as there's knots to untie, I think having experience in this, what I've lost over the last 30 years is going to be gusto and speed, but what I've gained, I think, is a little wisdom on how to untie these things. So you're in California, Colorado, Arizona. How big are you, and what are you trying to do professionally with your business?
Well, right now, I mean, I've already had all the big shops and done everything else, so I've narrowed everything down, and it's myself, a couple loan officers, and an assistant, and we just kind of do our business and kind of cater to specific clientele and all referral-based sources. And that's kind of where I'm at now. I spent enough years doing it and running the rat race and everything else. And now it's just kind of, I do a good bit of business and try to keep it easy and simple.
What's a good phone number or email to reach you?
Phone number would be 480-458-7463. And the email is scott@formulamortgagecapital.com.
Scott, nice talking to you.
All right, you too.